Good morning, Dave Delgado here with Freedom Choice Lending. Today, I wanted to give a market update on the four interest rate loan scenarios. Generally, across the board, rates have been improving a little at a time, so that's some good news out there. Or I think we're going to start seeing some more rates starting to stabilize while the market's getting adjusted to that. So on a conventional, we're seeing a slight improvement in that area. On this purchase price is 750 with 20% down with the $600,000 loan amount. Rates right around 4.375 with a mortgage payment of 29.96. So that's a really good rate, 4.375. We've just seen it kind of trickle down over the last couple of weeks, so that's awesome. On a jumbo program, though, this is we're finding that jumbo program, it's not a conventional program, so it's got a different set of guidelines, but rates are actually getting better than a conventional high balance. So that's a great news for the consumer out there. On a purchase price of 970, 800,000 with 20% down, that brings in a loan amount of 776, 640. Rates are right around 4.50, and that's on a 30-year fix. Payment is 39.35 on that. On an FHA high balance, loan amounts of 776, 640, and this is in LA County, Orange County. That brings in a purchase price of 970, 800 with 20% down. A rate of 3.75. What an awesome rate that is. Payment is 3660 plus mortgage insurance is 642 with a total payment of 4301 on an FHA mortgage. Even though it's 20% down, it does require mortgage insurance. But if your client's rate sensitive, there you go. You got a rate under 4% for them. FHA, there's been slight improvements in that area. 650 on the purchase price, 3.5% down. Loan amount 638,226. And guess what? The rate is 3.65. That's a phenomenal rate. Payment brings in at 2911 plus mortgage insurance 544. Total payments 3455. All these rates are based on a 30-day lock. Can we lock them sooner than that? Of course we can. But I just put 30-day pricing on there. So if we go with the shorter lock period, pricing will improve for your client. Fico scores these scenarios are all based on a Fico score of 720. FHA is not going to have a huge impact if you have a client that's lower Fico scores, but if you have a conventional buyer, it will have a much bigger impact on that. And rates are all based on a 1.5 origination fee. All that stuff is all negotiable, just depending on what works for the client. If we need to go slightly higher in the rate to offset that origination fees to bring in the closing costs, they're just going to get a higher interest rate. As soon as we start going back to a normal market, I think we're going to start seeing more where it's going to be like a 0-point loan. We used to do a lot of 0-point loans when rates were so low, but when rates spiked up over the last 60 days, we've been having a quote like anywhere between 1% and 2% to get the lower rate because that's what they're more concerned with. And if they have the cash to close to pay for the extra 1% to 2%, it works for the client. So keep in mind, closing costs have generally been a little bit higher because of results of higher interest rates. But as soon as we get back to a normal market, I think when things start to stabilize, we'll start looking more at the lender paid, basically 0-point loans, where it's not going to cost them anything for any fees, and it's just a no-point loan, just paying for underwriting fee, and that's it. So if you have any questions with that, feel free to give me a call back. My phone number is 562-281-6163. And don't forget about the no income, no employment. It's no tax returns, no W-2s, no pay stubs, up to 80% with the 640 FICO score. Call me for more details. Again, it's 562-281-6163. Thanks for watching.